What's up everyone, it's Karthik with MoneyVest. So in this video, we are going to be talking about Palantir and SOFI, since you guys absolutely love analysis on these two companies. Yesterday's video was a huge success. A lot of you guys commented, thank you, appreciate you, and this is exactly what this video is going to do. Give you a daily technical update and a little bit of a fundamental update on these two very loved stocks as well, which I do have a position in Palantir and SOFI both, but they are not super big positions. They are pretty small positions, and I'm actually planning to add more of SOFI. SOFI, I feel like, has a ton of potential long-term. In fact, both companies have a ton of potential long-term. Just from a pricing standpoint, I feel like SOFI continues to be a little bit more depressed, trading down to low 6s and 7s, whereas Palantir is already trading almost back up to its all-time highs. Of course, they're still well in the 40s, but right now Palantir well over $28, $29 still seems to be a bit more on the expensive side. So we're going to break down everything in this video. As always, if you enjoyed, find it helpful, make sure that you drop a like and subscribe to the channel. Also, I want to remind everyone, July 31st is here, so if you want to take advantage of a 16% annual discount, save 2 months, and get those 2 months for free, link's going to be down below if you want to join our Discord. Get access to all the trade alerts, including our Patreon and members-only videos, including my stock and ETF buy list, and the MoneyVest platform that's also going to be available. So this right here is going to be the entire platform which you can access, which we are going to once again take a look at for individual companies to do full comprehensive fundamental analysis, including the earnings calendar, and we're also adding a lot of other features and additional tools, including the very popular MoneyVest index is also going to live on the MoneyVest platform. So link's going to be down below. And also, we're doing a free giveaway. So if you ever wanted to get access to the entire 4-course bundle for the courses, psychology, fundamental analysis, technical analysis, options trading, this is, 4 courses that I've created myself with over 100 plus lectures and 20 plus hours of content. You will get access to it for free if you are to win. So we're doing a free giveaway. We're going to be picking out a few winners from my follower list. So if you are connected with me on Instagram, all you have to do to sign up is simply follow me on Instagram. My handle is going to be CastWRP, and that's almost $1,900 worth of value that you will be in a chance to win for free. So again, feel free to join. Link's going to be down below. So let's talk about SOFI first. SOFI reported their numbers. Very, very strong growth here. Consistency coming in with 8.7 million new member additions here. So total 8.7 million. So new members adding in of 643,000 in the second quarter, bringing to nearly 8.8 million members, up 41% on a year-over-year basis. When it comes to new product additions, of almost 1 million products added in the second quarter 2024, and getting up to over 12.8 million products, and that's up 36% year over year. Galileo accounts also accelerating back up to over 158 million accounts here, up 23% year over year. So that growth continues to accelerate. That's very nice to see. And this right here, quarterly adjusted net revenues of a record almost $600 million. I listened in on Anthony Noto's discussion with Jim Cramer at CNBC. A lot of really interesting insights. He mentioned that this is a record quarter, which would not be possible because of the charge-off and, of course, the refinancing of the debt that they did. So lowering costs, and at the same time, also shifting their businesses away from just being a lending company, getting charged on capital, but also providing financial services, which is less capital intensive and also less expensive overall and has higher margins. So this is only possible because of the very fact that they're able to become a fintech company offering a lot of services when it comes to individuals for related to personal finance, investing, savings, spending, everything included. Quarterly adjusted EBITDA came down a little bit, but $138 million is that number. Still incredible growth on a year-over-year basis compared to $74 or $77 million. So that is still almost a 100% increase on a year-over-year basis. And this right here was their over-deliverance on the actual numbers versus the guidance. They guided for $555 to $565 million in revenue, reported just shy of $600 million, and adjusted EBITDA coming in at $138 million versus guidance of $115 to $125. Margins coming in stronger at 23% for the company for adjusted EBITDA, and net income coming in $17 million, 70% higher than what their high guidance was at $10 million. So once again, very, very significant growth here for the company, and also profitable on a GAAP basis, and revenues also hitting a new all-time high and a record quarter here. For the third quarter, they're expected to deliver $625 to $645 million in adjusted net revenue, which is going to be another record high for SoFi. $160 to $165 million in adjusted EBITDA, $40 to $45 million in net income, and 4 cents per share in earnings per share here for the company. So those right there are going to be their expectations on the low end and on the high end for SoFi. And for the entire fiscal year 2024, they're expecting financial services net revenue growth more than 80% versus 2023 levels. And this is really where the growth is coming from. And that's what Anthony Noto also mentions. One of the reasons why he says the stock price may not be moving is because of the lack of understanding of how their business works. And it's going to take a lot of repetition for the metrics that they announce. And there could be a lot of confusing terms, and they need to be able to provide more clarity when it comes to understanding their business metrics so that investors are feeling more confident that this is indeed a company that has a lot of long-term potential growth here. So financial services is really what pulled the company higher because lending revenues only really grew 5% on a year-over-year basis, but financial services is where the growth was at over 80% for the company. Lending adjusted net revenue of at least 95% of 2023 levels, so that again is going to be almost on par with the same time last year. And tech platform net revenue percentage growth to be mid to high teens versus last year. GAAP net income, this is interesting, right? So $175 to $185 million in GAAP net income, so actual net profitability. Adjusted EBITDA $600 to $615 million, and diluted earnings per share of 9 to 10 cents per share, with GAAP diluted earnings per share is what the 9 to 10 cents is. $800 million to $1 billion in tangible book value growth, and total capital ratios of well over 16% by the end of this year. Now, this right here is going to be the entire guidance. They are now expecting a guidance of $2.4 to $2.46 billion in revenue, which is significantly higher than what their prior guidance was for 2024. Adjusted EBITDA, all these things we just went over, with diluted earnings per share of 9 to 10 cents per share. So if you really do the math here for the company, right, where is SoFi stock really trading at the moment? SoFi at the moment is trading at $7.42 divided by, let's say, 10 cents per share. We're looking at a 74 times P multiple based on 2024 numbers. This is actually not bad at all. This is 74 times. Yes, it's a little bit more on the higher side, but a couple things. Number one, I believe that the growth is only getting started, so that growth rate is going to accelerate in the 40, 50, 60% range over the long term. And also, the 74 times multiple is based off of 10 cents per share, which the company could very well over-deliver, which they have already done. So they've got a track record of under-promising and over-delivering in the previous earnings calls as well. So yes, while some people may argue that 74 times earnings on 2024 basis is extremely high, it is a multiple that I don't want to pay for this company. I'd much rather pay closer to 25 or 30 times. That's totally fine. You know, obviously not every stock is going to be investable for every single investor, every single analyst out there. But for me personally, 74 times earnings on 2024 basis for a company that's expected to grow even faster in the high 40, 50, 60% range over the long term, and as it turns the corner towards profitability, that is only going to continue. I don't mind 74, 75 times earnings multiple. So I do have some SoFi. Obviously, I've been buying very, very small quantities, as you guys have gotten a lot of questions correct in our live streams and different videos. So, you know, we made a pact that for every question you get right, I buy a SoFi share. So I have accumulated quite a few because you guys are smart. But this right here is going to be that next support level that I'm watching at 640. We're still very much within the context of a descending triangle. So you'll notice that even after the earnings reported, I mean, SoFi didn't really move much, you know, got up to as much as 784, didn't really, go up or down all that much. But this right here is still within the context of a descending triangle, getting rejected at this lower high for SoFi, and a very strong area of supports in roughly at 640s. So 640, 645. This right here is going to be that level to keep in mind for SoFi. So lower highs are going to be forming, very strong horizontal support, and that is going to be that support at roughly around $6.40. And again, the earnings coming in with strong beats for the company, 1 cent per share in earnings per share, and revenue coming in at a record almost $600 million for the company. So very strong levels at 640. I wouldn't mind being a little bit more aggressive here at those levels at $6.40. But of course, if and when we actually do see the price breakdown below this, comes down to, let's say, low 4s or 450s again inside this green rectangle, I will be very, very aggressive. That would pretty much be a no-brainer buying opportunity for me personally for SoFi, because I'm starting to become more and more bullish on the company. As Anthony Noto also said, that the macro environment is also a bit of a concern why the price is not moving because of the interest rates and where they are. And if there is a September cut, then that's going to be a huge tailwind for the business, because they're going to see an increased activity in home lending and in student loans as well. This right here are going to be their delinquencies. That's another reason why SoFi has a significant moat, is because their credit criteria are very stringent and they're not lending to just about anybody, but instead they are doing a lot of research and a lot of analysis to better figure out who are more credit-worthy borrowers. And as a result, their delinquencies are really, really low, below this industry average at under 0.5%, in most cases under 0.1% also, right? So really, really low delinquency rates over a 90+ period. And this right here is going to be their balance sheet, sitting on about $3.8, almost $4 billion of cash and cash equivalents and investment securities, with convertible senior notes due 2026 and 2029 at just under $900 million. So they do have, again, more assets than liabilities on the balance sheet, more cash than debt on the balance sheet as well. So this is, again, the interview where Anthony Noto, again, said record revenue driven by 46% combined growth in financial services on the tech platform. Key drivers, 41% growth in members and strong product innovation, and raising their fiscal 24 guidance as well. $73 billion plus in funded loans, 8 million members, and $34 billion plus in debt paid off by the members as well. Now let's switch gears over to Palantir, and Palantir trading at just over $26. They do have their earnings coming up very, very soon. So if you come over to the earnings calendar, let's come over to Palantir. So they have their earnings coming up literally on August 5th. So next week, not this week, but next week, you can pretty much access all of that on our platform. There you go. So that's Palantir right there. It's going to be reporting on Monday, August 5th, after the markets close. $665 million in revenue expectations, with just over 8 cents in earnings per share for the company as well. The price targets, they've been raised a little bit from Citi and Jefferies. So if you come back over to some of the catalysts, analysts are adjusting their price target, with Citi raising the price target from $25 to as much as $28 on Palantir, affirmed a neutral rating on the shares as part of the second quarter earnings preview from the company. And Citi also believes that Palantir's AI platform, so AIP, will be able to gain momentum. And those were some of the factors in raising the price target from $25 to $28. Jefferies also raised the price target to $20 this morning from its prior target of $24, reiterating a hold rating. And analyst Brent Thill pointed out that Palantir's generous valuation at 19 times expected sales for the cyclical year 2025, generous, making it the most expensive name in our coverage, right? So at the same time, Palantir's past few quarters have been strong, with Thill characterizing the company as a rare blend in AI applications and infrastructure asset with NT-Rev momentum as well. The average price target, of course, on Palantir, according to analysts who at one point absolutely hated the company, is now $22.70, so slightly below where the market price is, with a high target of almost $37 a share and a low target as low as $9 per share. And as I did a video yesterday on Palantir as well, we are very much in a nice consistent uptrend of higher highs and higher lows, with a very strong support sitting inside this green rectangle. So this right here is going to be that level to watch as an area of demand for Palantir. Right now, we continue to get rejected here inside this area of supply, and this huge resistance that we have for Palantir sitting roughly around $29 to as much as $30 for Palantir, kind of aligned with this previous resistances as well. And of course, a massive support inside this green rectangle for Palantir. We're still within the context of this uptrend, so we still have this higher high and higher low pattern for Palantir, with a huge resistance here at around $29, and of course a massive support sitting roughly at $20. I don't mind dollar cost averaging slowly and steadily, little by little here, but I would be a lot more aggressive once here and the other time over here. Oftentimes people believe that some of these levels are almost impossible to get hit, and I think we have to remember that yes, they are very less likely. The probability of them coming down to those levels are low, but they're not impossible, right? We see things that were deemed impossible in the markets all the time. They happen all the time, right? So keep a close eye at this resistance here for Palantir around $29, with a massive support and area of demand in the 19s to 20s. And of course, a much stronger support sitting roughly around $13 to $14 for Palantir as we continue to trade in the context of this uptrend. So let me know your thoughts down in the comment section below. And what do you think about Palantir and SoFi? Are you buying, selling, or holding this stock? What are your thoughts on these companies over the long term? We'd love to know from you guys in the comment section down below. Don't forget to join our Discord to get all the trade alerts, trade ideas, members-only private videos, including my 37 stocks and ETFs watch list and my shopping list and my buy targets, as well as the MoneyVest platform, where we continue to add a lot more features over time. And also do follow me on Instagram. Handle is going to be CastWRP for a chance to win the entire 4-course bundle for free. Link's going to be down below. And as always, happy investing. I'll see you all in the next video.